All right, if you're thinking about buying a home, you're eventually going to come face to face with this beast, the purchase contract. I know it can look super intimidating, but it really doesn't have to be. Today, we're going to break it all down piece by piece so you know exactly what you're signing. Let's jump in.
For a lot of people, the answer is a huge yes. I mean, come on, it's dozens of pages of dense legal language, and it's tied to the biggest purchase you'll probably ever make. The stakes feel incredibly high, and it's so easy to get overwhelmed. But what if we just looked at it a little differently? So instead of seeing this contract as some scary obstacle, let's reframe it. Think of it as your own personal roadmap. Seriously, it lays out every single step, every turn, every rule of the road for the whole journey of getting the keys to your new place. And understanding the map? Well, that's the key to making sure the trip goes smoothly. Okay, so let's start at the very beginning of our map. The first section really just sets the stage. It's all about identifying the who, the what, and the where of this entire deal. These are the absolute can't-mess-them-up fundamentals. The first part of any contract is all about crystal clarity. It's going to list exactly who the sellers are and who the purchasers are. It pinpoints the exact property, not just with the street address, but its official legal description too. And it discloses which real estate agents are representing each side. There's zero room for confusion here. Everybody knows exactly what their role is right from the get-go. Now here's something that trips people up all the time: the difference between fixtures and personal property. So fixtures are things that are physically attached to the house. Think ceiling fans, built-in dishwashers, that kind of stuff. Those are included. But personal property, like the seller's awesome leather couch, that is not included. If you fall in love with their patio furniture or the fancy curtains, it has to, and I mean has to, be put in a separate written agreement. If it's not in writing, it's not staying. Simple as that. Speaking of things you need to pay attention to, let's talk about the number 3. This number is a huge protection for you if you're buying a home in an HOA or a condo. The seller has to give you what's called a resale certificate. It's this whole packet of documents with all the rules and the financials of the association. Once you get that packet, the clock starts. You have a 3-day window to read through everything and decide if you want to back out. It's a really critical escape hatch if you see something you don't like. Okay, moving on to Section 2. Let's follow the money. This part of the contract is really the financial heart of the whole deal. We're talking price, loans, and your deposit. The contract is going to spell out exactly where the purchase money is coming from. For like 99% of people, it's a third-party trust. That's just a fancy legal term for a standard mortgage you get from a bank or a lender. What's less common is seller financing, which is where the seller basically acts like the bank for you. Either way, this section lays out all the terms. So if you're getting a loan, the contract gives you a very specific to-do list with some hard deadlines. You've got 5 business days to formally apply for that loan in writing. Then you have to really work with your lender, getting them documents, answering questions, all that stuff. And finally, by a specific date, you have to let the seller know that, yes, your loan is approved. If you miss these steps, you could put the entire deal at risk. Now let's talk about the deposit, which you'll probably hear called earnest money. This is not an extra fee, okay? It's more like a prepayment that shows the seller you're serious. The good news is it gets credited back to you at closing. But, and this is a really big but, if you don't hold up your end of the bargain, you could lose that deposit. So how exactly could you put your deposit at risk? The contract is super specific about this. You could be in default if you don't apply for your loan on time, or if you drag your feet getting your lender the paperwork they need. Or, and this is a big one, if you do something that wrecks your credit, like going out and buying a brand new car right before closing. The contract basically requires you to act in good faith and do everything you can to get that loan. All right, now we're getting to one of my favorite parts of the contract, because this is where the buyer really gets empowered. The inspection phase is your chance to do your homework, to be a detective, and to really learn about the house you're about to buy. It's your number one shield against any nasty, hidden surprises. One of the key reports the seller is required to give you is the wood infestation report. Now, this isn't just some guy poking around. It's a formal report from a licensed pro done within 30 days of closing, and it's specifically looking for termites, carpenter ants, and any other little critters that destroy wood, and of course, the damage they've caused. So what happens if they actually find something? Well, the contract sets a standard limit. The seller is on the hook to pay for treatment and repairs up to $1,000. That number is a really important line in the sand that determines what happens next. If the damage is pretty bad and the repairs are going to cost more than that $1,000 limit, you've got choices. Option 1, you can just accept the property as is and the seller pays for that first $1,000 of work. Option 2, you can take a $1,000 credit at closing and deal with the repairs yourself. Or option 3, if it's just too much to handle, you can walk away, terminate the contract, and get your deposit back.
The contract also talks about another kind of shield, title insurance. Think of it as protection from the property's past. It defends you against issues you couldn't possibly know about, like a long-lost heir showing up to claim the house, or an unpaid bill from a contractor who worked on the house years ago. Your lender is going to require it, but it's an absolutely crucial protection for you as the new owner. Hey, remember that $1,000 figure from the wood inspection? Well, a similar idea pops up in other places. It's called the remediation limit. This is the max amount, usually $1,000, that the seller has to spend to fix other specific problems that might come up, like a weird issue with the property's title or if the well water is contaminated. Right before you close on the house, you get one last chance to walk through it. This is the pre-settlement inspection. Now, the point here is really, really important. Its purpose is to verify that the property is in the same condition it was in when you signed the contract, and to make sure any repairs you agreed on have actually been done. It is not the time to start asking for new repairs.
Okay, we have navigated the map, we've followed the money, we've done our inspections. It's time for the final section, crossing the finish line. This is all about those last few steps to finally get those keys in your hand. Settlement day, or closing, this is the main event. It's the day that's right there in your contract when everybody gets together. You're going to sign what feels like a mountain of paperwork. The lender's money gets wired to the seller, and boom, the property is officially yours. Possession transfers at settlement, you get the keys.
And here's a little peace of mind that's built right into the contract for you. What if, say, a huge tree falls on the house the day before you close? Who's responsible? The seller is. The seller bears that risk. Right up until the moment that settlement is 100% complete, they are on the hook for any major damage to the property. You're protected from any last-minute disasters. And finally, this is probably one of the most important warnings in the entire document. Wire fraud is a massive, massive risk. Before you send that huge chunk of money for your down payment and closing costs, you absolutely must confirm the wiring instructions with the settlement company. And you have to do it verbally by calling a phone number that you know is legit, one that you verified yourself. Never, ever trust wiring instructions that you only got in an email. So, let's just bring this all home. That long, intimidating document, it's not your enemy. In fact, when you actually understand it, it becomes your greatest tool. It's the rulebook for the whole game. It's the roadmap that guides you straight to closing day. And it's the shield that protects you and your money every step of the way. By breaking it down like this, the contract really changes from an obstacle into a tool that empowers you. It gives you the confidence you need to navigate one of the biggest purchases of your life. So now that you have the map, you can focus on the exciting journey ahead. Thanks so much for joining us for this explainer.